You're seeing a rotation away from them.
But after nearly 3 months of falling,
It's down very sharply.
these MAG7 stocks are starting to look more attractive.
The stock is seeming to try to find a bottom.
MarketBeat's Chris Marcotte shares 3 MAG7 stock picks that are too cheap for investors to ignore.
The stock could get north of $700, $710 a share.
Is it time to rotate back in before the potential upside is lost? Let's dive in. All right, Chris, great to have you here to talk a little bit more about the MAG7 and the rotation and the big dip that we've been seeing this year. Let's dive right into kind of what the MAG7 stocks have done really since the start of the year.
The Magnificent Seven stocks, you're seeing a rotation away from them and away from many tech stocks in general. And you're seeing that go into some other sectors like consumer staples or utilities or maybe even energy. To be totally fair, for some investors, that means the money's going right into cash, or it's going into gold or precious metals or other sort of investment asset classes. The question investors have to ask now is maybe this is the time to start looking to get back into these technology stocks because some of these stocks are looking pretty attractive.
The theme of today's video is 3 MAG7 stocks that are too cheap to ignore right now. And some investors really believe that we may have already hit that bottom and are starting to trend back up. Can we talk about kind of overall, are we seeing a little bit more of an uptrend in the S&P 500?
The S&P 500 in general, we're still kind of seeing a lot of choppiness. It's not really looking to make any sort of new highs right now. You're kind of seeing it trade in a defined range at the moment. And I think we're going to see that for much of the rest of the first half of this year. I think if we start seeing any movement towards new highs, that's not going to happen until the second half of the year. And we're also seeing that same downward pressure on the NASDAQ, which is where these Magnificent Seven stocks lie.
We'll dive into the details of each of these companies a little bit more. So let's just get started with your first pick of a MAG7 stock that's just too cheap to ignore right now.
My first pick here is Amazon. Amazon's looked like an interesting investment for quite a while. Investors know that obviously in 2020 and 2021, Amazon's e-commerce business just accelerated. This movement towards e-commerce just took off, exploded. Everybody was buying stuff online. Everybody was having packages delivered to their homes. In 2021, at the end of 2021, you've seen Amazon stock drop sharply. But in the last year or so, investors have noticed that it's been AWS that's sort of picked up the slack and helped carry the stock. And I think right now what investors are noting is that maybe that cloud business isn't quite getting enough attention in terms of how much it's contributing to revenue and, more importantly, earnings for Amazon. And this is coming at a time when the e-commerce business is maybe not as robust as it was certainly in 2020 and 2021, but it's starting to show signs that it might be coming back as well. So this could be an example of a company where all of the parts are starting to come together at the same time.
Yeah, absolutely. And we're going to dive into Amazon's chart in just a minute. First, I want to talk about some of the economic impacts on Amazon's business. You mentioned AWS, and I feel like that is outside of this question, but for their consumer side of their business, as we talk about inflation and uncertain economies, do consumers start spending less, and does that impact Amazon's value?
So far, we're not necessarily seeing that they're spending less with Amazon. The package delivery still seems to be fairly robust. But yes, if we were going to start seeing the consumer weaken, Amazon would be one of those areas where you would be looking pretty closely. But so far, Amazon and a company like Walmart, those are the companies that are seeming to weather through this pretty well. And again, I think you're going to see winners and losers here. And right now, Amazon still seems like it's a winner.
Yeah, anecdotally, just to drive through the neighborhood on front porches filled with boxes would tell you they're doing pretty well still, I think. Well, let's dive into that stock a little bit. Why is now a good time to get into Amazon?
So this is a chart showing the last 30 days for Amazon. And one of the things that investors will notice is here on the 25th, this low of around 190, and it kind of bounced off of that twice. And that's a good signal for investors that confirms that that may be a level of support for the stock. And since then, as they'll notice, it's gone up, up, up. And now when it's dropping, it's It looks like it's trying to find a level of support, but that goes all the way back here, all the way back here. So that says that the stock is seeming to try to find a bottom, and that bottom is starting to move up. So then if we zoom out and we say maybe over 3 months, you can start saying now there might be an argument where the stock starts to go to 205 and then even maybe up here to 216. And that's, I think, what a lot of investors are counting on right now, is that if they can count on this as being the bottom as being formed, then right now there should be no reason why the stock isn't going to be going up.
And I think for investors that are looking to find that bottom but still catch enough upside, now seems like a good entry point to get into Amazon.
I would agree with that. And analysts are backing that up too. Analysts are raising their price targets. And this is happening as we're about probably a few weeks away from their earnings report. So
absolutely. Well, we'll stay tuned for that too. Let's move on to your second MAG7 pick that's just too cheap to ignore.
Sure. The second one here is Alphabet. And the reason why the stock's been sliding is because of AI. It's generative AI. We have tools such as Grok, we have tools such as ChatGPT that a lot of people are using to do their search, because what they're finding, Bridget, is that when they use ChatGPT, when they use Grok, it gives them a more direct answer and they don't have to search like they would. Even if you query something into Google, Google is going to give you back a bunch of results, but then it still kind of relies on you to do some of the digging yourself, whereas ChatGPT or Grok will just spit out an answer. However, that isn't showing up right now in Google's numbers. It's still, right now, Google is still by far the leader in search, and they're still commanding a premium for the ad revenue for Google search. So as long as that stays in place, this narrative that says Google search is going away, that I'm not so sure about that.
Really not the only part of this business anymore too. Alphabet is really doing a lot more in the AI sector itself.
Correct. So, first of all, that's actually a great setup, Bridget, because Google is aware, Alphabet, I should say, is aware of the fact that obviously generative AI exists, and they're putting their own generative AI into their search engines. And so basically, yes, Alphabet's trying to capture some of that market by saying they're adapting Google search to include AI, and they're making a significant investment to do that. That's affecting earnings a little bit right now, but Alphabet believes over time, you're not going to notice that so much.
But let's look at Alphabet's stock right now too. It's a little bit similar to what's happening with Amazon.
What you see here is, again, it hit this dip same day that we saw that dip hit in Amazon. It was on March 25th, hit this dip. It bounced higher, and now it's going lower, and we're going to try to see if it tests that dip again. If it does, then that may be a good signal to investors. Anytime they see that double hit off of that support, that is a good sign that that's a solid level of support for the stock. Plus, you see here the relative strength indicator shows that Google is dipping into the oversold range here. So it's looking like this is a good time for investors who want to get involved in Alphabet.
All right, so that's our second MAG7 stock. Let's move on to your third pick of a company that also is too cheap to ignore.
Some people would question whether Meta stock is cheap, but I do believe that Meta Platforms is reaching a buyable point right now. And that's not necessarily my opinion, but it's the opinion of analysts. We're getting close to that second quarter earnings season, and right now, analysts are driving up the price target for Meta Platforms. And that's something that really investors need to be paying attention to. Meta is the company, as investors will recall, that in the last quarter, they said they were going to continue with their aggressive AI spending. And this is coming at a time when some other tech companies were saying they're going to back off on that spend a little bit. Meta seems to be doubling down on it and saying, no, we're going to spend more. So it's going to be interesting for investors to see how that plays out in the next earnings call. And if Mark Zuckerberg and Meta continue to be aggressive with that spending, or if maybe they say, if they too decide that they're going to back off. But right now, analysts don't seem to be concerned either way. They're bidding up the price of the stock, and it looks like this may be a time for investors who were thinking about getting out of the MAG7, maybe this is the time to start thinking about getting back in.
Chris, I want to end the video by diving into Meta's chart a little bit. But before we pull up the chart, take a look at this premium report you can get for free on MarketBeat right now, all about Metaverse stocks and why you can't ignore these right now. You can scan the QR code or click the link in the description of this video to get that free report on Metaverse stocks right now at marketbeat.com. Chris, let's dive into Meta's chart a little deeper. It's not necessarily the cheapest stock out there to buy, but it is down a considerable amount right now.
This is the 1 month chart for Meta. And again, it's down very sharply from here, from a peak up here of around $650 a share. And it's dropped significantly since then. And analysts are predicting right now that the stock could get north of $700, $710 a share. So that's representing a fairly significant discount to where analysts believe this stock could go.
Yeah, I know analysts are very bullish on the future of this stock and many of the MAG7, even though retail investors and maybe the market itself is showing there's less of an interest right now. What do you think it will take to see that turnaround for all of these stocks?
One of the things that I think will need to happen will be to see a firm decision on tax policy. And if we start seeing the fact that taxes are going to be down, if we see the fact that the economy looks like it's recovering, I think that's the tonic that these stocks really need, because these companies are so dependent upon borrowing money to spend to build out this AI infrastructure to do this. And they need they need to know what their costs are in terms of the cost of money. And right now there's just a lot of uncertainty about that. But I think we look like we might be getting more clarity on that towards the second half of the year. And that's where I think these stocks may really take off.
Some really good points for investors to consider. Let us know what you think. Are you into the MAG7 right now at these lower prices, or are you rotating out and looking for other horizons for your investments? Thanks again for watching, everyone. And as always, happy investing.